Hey guys, Clinton Sistrunk, Colorado Mortgage Team. Okay, today I want to talk to you about a little known mortgage product called the Simple Interest Mortgage. And it's a loan that the financial savvy and elite use to greatly grow their wealth faster than anybody else that I know. Now, let's look at the standard in the mortgage industry. It's a 30-year fixed conforming loan, right? And when you look at a 30-year fixed loan, you have an amortization table that sets out all 365 payments in stone. What that means is that your interest is front loaded. And if you look at your payments in the beginning, most of your payment is going towards interest instead of principal. And if you make your payment a week early, the same amount is going to interest and principal. It doesn't save you anything. If you pay extra on your loan, one of the things that people don't fully realize, you pay extra on your loan, on an amortized loan, you pay the principal on the last payment, 365, and you work backwards. And the interest that you would have paid on that payment is the interest that you save. However, you don't actually save that interest. Not only is it a very small amount for the principal you're paying, but you don't save that interest unless you term out your loan. You make every payment until the loan's paid off, not sell or refinance, but actually term out that loan. The average loan lasts 7 years, and it's very rare that anybody terms out their loan, which means you don't save any interest. You just gave a free loan to the bank when you prepay. Now, we call it a mortgage vault. And the reason why is because when you pay money on that loan, you can't get that money back unless you come talk to me and spend $4,000 and qualify at that point in time and reset your amortization schedule back to another 30-year loan if that's what you choose through refinancing. Or you have to sell the property to liquefy that equity. Now, let's contrast that to a simple interest mortgage. This is a combination of a 30-year fixed loan, a home equity line of credit, and a checking account. It instantly liquefies your equity in that property. You have real-time access to it with all the tools of a traditional checking account. Think debit card, checks, bill pay, ACH transfers, wires, that kind of thing. Not only that, but because it's simple interest, if you make your payment a week early, you're saving money in real time because they take the balance in that on that loan, apply the interest rate every single day. At the end of the month, they add up all those interest payments and they add it to the principal balance. It's an interest only payment. So paying extra or paying early saves you interest in real time. You know that nifty little escrow account where they collect 1/12 of your taxes and your insurance every single month? It just sits there earning no interest, saving you nothing. It's just an escrow account that you pay into every single month. There's no escrow account with the simple interest. The idea is you put the money on the principal balance, save interest in real time, and when taxes or insurance are due once a year, you just pay it right out of the house because, again, your equity is liquid. Now you get the time value of money back. So you go out and you start finding pools of money that you have sitting in savings and checking and money market, not earning the same return as what you're paying on your house, and you put it into your house. You put your emergency fund in there. Why? Because it's liquid money and you're saving interest while you're doing it. Whenever you have something that comes up in the future, whether it's a need or a want, let's say it's an investment, buying a car, sending a kid to college, paying taxes, an unknown medical expense, you have liquid access to the funds in that house. When you come across opportunities to make returns greater than the interest you pay on your house, you now have access to money, of capital. And this is why you can grow your wealth in a way that other people can't with a simple interest mortgage. You pay your house off extremely quickly, you save a ton of interest, and you're safeguarded. Here's another cool aspect to this. As long as there's equity in the house, you don't have to make a payment. The interest that accrues at the end of the month just gets added to the balance. So let's say you're self-employed, you have variable income. You're protected during economic slowdowns because you don't have to make a payment. You don't default. You don't get a late payment on your credit. You're protected. You could not make a payment for 6 months and they wouldn't say anything. Nothing would happen to your credit. Nothing would happen to your house. your balance would just go up by whatever that interest was that accumulated, and then you could start paying it down when things changed. This protects you. It's a form of insurance. For people that plan appropriately, it's also a great way to think about retirement. Reverse mortgages are necessary for a lot of people that are in bad situations, but they are very expensive. The fees are 3 times what they are on a normal loan. They also are very rigid, meaning you have to take a lump sum or a monthly amount or a combination of, and that's it. There's no adjustment. You just get that shoved to you every single month, and it gets added to your balance, and interest compounds against you. With a simple interest mortgage, you're in control. You can choose how much you want to take in any given month. You can put money back into it to pay less interest. You can take a little, a lot. It doesn't have to be something you have to decide today. It can be there as a safeguard in retirement for months that you just need to supplement some income. This is where working with your mortgage professional to plan for the future, especially as you approach those retirement years, makes a ton of sense. We are here to help you find the best path forward in your mortgage financing career. There are so many other cool aspects to this loan, but we will do a one-on-one simulation. We will take your current loan or the loan that you're considering and put it up side by side with a simple interest mortgage and do a simulator to show you exactly the power of this loan, explain all the pros and the cons, and help you decide if it's the right choice for your family. There's a link down below. You just simply click on that and you can set up a one-on-one with any one of us. We are top producers with this product in the marketplace for a reason, and we are happy to showcase it for you and see if it's right for you. It's not for everybody, but for the financially savvy, it makes a ton of sense. I hope we get a chance to show this off for you. Have a fantastic day.